The recent few months, probably since August to last year with Marikana, has seen a dramatic weakening in our currency. Since the beginning of 2012 to now, the rand has probably lost well over a third of its value. A lot of people are worried about this. We've spent quite a bit of time trying to analyze this and what are the drivers behind this. Most people originally thought that the rand was weakening specifically because of domestic issues such as labor unrest, weakening economics, slower growth in South Africa. What we found is that in 2012, most of the currency's weakness was actually linked to other emerging market currencies that were also weakening. So 2012 was a very bad year for emerging market currencies. It was very good for their equity market. So our equity market did very well, as did other emerging market countries. But their currencies depreciated. And we've also seen commodity prices come off, which tends to mean a stronger dollar, which tends to mean weaker emerging market currencies. So 2012 was not actually domestically driven in terms of the rand weakness. It was mainly in 2013 when we started seeing the rand decoupling from other emerging market currencies and weakening without the peer group weakening as well. So we're seeing this year a change in the dynamics of the currency. One of the things that really worries us in terms of the currency is that a lot of people who are investing or had invested in South Africa with this fantastic equity bull run have done so on the back of their interest in getting exposure to emerging markets. If there is a change where we are starting to see the signs of a strengthening US economy and perhaps Europe coming out of its doldrums, there might be a switch out of emerging market countries back into the developed markets. And that would have a multiplier effect on the South African market as well as on our currency, because suddenly people will be saying, hang on, inflation in South Africa is going up, the interest rates aren't going up because of the domestic growth concerns. So people are saying I should actually keep my money in the US or in Europe because I'm actually getting a return above inflation in those markets, whereas I'm not necessarily getting that anymore in South Africa. And the whole trade will unwind itself, where people are going to pull out of these countries, including South Africa, and our currency could weaken even further. So we're certainly seeing this year a totally different movement or dynamics behind the rand than last year.